In the past week, we've seen some major stocks on the Nigerian Stock Exchange fall by more than 10%. And unfortunately, many traders and investors gave back a lot of their profits. Not because they bought bad stocks, but because they simply didn't know when it was time to take profit. Now, here's the interesting part. One of the biggest challenges traders face is in finding stocks to buy. It's knowing exactly when to buy and when to sell. Because buying is only half of the equation. If you don't know when to lock in your profits, the market can take them back just as quickly as it gave them to you. And trust me, I've learned that lesson the hard way. When I first started trading, I used one of the most popular indicators in the world. Every time it gave me a buy signal, I bought, only to watch the stock continue falling. Sometimes I'd be down 20,000, 50,000, sometimes even more. Other times I'd panic and sell too early, only to watch the stock rally another 20% or 30% without me. It was frustrating. Then I started asking myself, how can an indicator that millions of traders use worldwide be giving me so many bad trades? Well, I realized it wasn't the indicator. It was the way I was using it. And once I discovered the missing piece, everything changed. That same indicator has helped me identify some of my best trades on both NGX and US stocks. More importantly, it has helped me avoid giving back profits after strong market rallies. And today, I'm going to show you exactly how it works. This indicator is called the Relative Strength Index, better known as RSI. And by the end of this video, you'll understand what RSI is, how to set it up, why I use different settings for many NGX stocks, how it helps identify potential buying opportunities, and how it can also warn you when a stock may be getting too expensive. So if you've ever wondered, when exactly should I buy, or when should I start thinking about taking profit, then this video is for you. If you're new here, welcome to my channel Trade with Raks, where you learn how to build wealth through trading and investing in the financial markets. If you want to learn more trading and investing tips, strategies, and get weekly market insights, then don't forget to hit the subscribe button and turn on notifications to get notified anytime I upload a new video. Also, give a thumbs up to like and share and help this video get at least 100 likes. So without wasting much time, let's get started. And remember guys, this video is for educational purposes only. I am not a financial advisor and this is not financial advice. Always do your own research before making any investment decisions. Before we start talking about how RSI works, let me quickly show you how to add it to your chart. I'm using TradingView, but the process is almost the same on most trading platforms. So simply open any stock chart. Go to the Indicators tab at the top. Click on it, then type Relative Strength Index. You'll see it appear in the list. Click it once and it automatically appears below your price chart. Very simple. Now let's look at one important setting. If you click on the settings icon, you'll notice something called length. By default, TradingView sets this to 14. Now, RSI 14 has been around for decades. It's the traditional setting and it works very well for swing traders and investors because it measures price changes over the last 14 candles. Since it looks at more candles, it reacts a little slower, but the advantage is that it filters out a lot of market noise. Now, compare that to RSI 5. RSI 5 reacts much faster because it only looks at the last 5 candles. That means you'll get signals earlier, but you'll also get more false signals, so there's always a trade-off. For me personally, when I'm analyzing many Nigerian stocks, I usually switch between RSI 5 and RSI 14, depending on the stock and the time frame. Most of the time, I like analyzing on the daily chart, and for very active stocks or longer term investments, the weekly chart can provide even stronger signals because it filters out much of the daily market noise. So I analyze on both daily and weekly time frames. Now that our RSI is set up, Let's understand what it's actually telling us. Now, what exactly is RSI? You hear traders talk about it all the time, but what does it actually mean? Well, RSI stands for Relative Strength Index, and despite the name sounding technical, the idea behind it is actually very simple. Think of RSI like the speedometer in your car. When you're driving, your speedometer tells you how fast you're moving, right? It doesn't tell you where you're going, it simply measures your speed. RSI works in a very similar way. It measures the speed and strength of buying and selling pressure. In other words, it tells us whether buyers are becoming stronger or sellers are becoming stronger. That's why RSI is called a momentum indicator. It measures momentum, not value, not fundamentals, not whether a company is good or bad. It simply tells us how aggressively buyers or sellers are pushing price. And this is very important because momentum often changes before price changes. Let me explain. Imagine a football match. One team has been attacking for almost the entire game. They are creating chances, they are dominating possession, and eventually they score. Now imagine the opposite. One team suddenly starts getting tired. Their attacks become weaker. They are losing possession. Even before they concede a goal, you can already sense that momentum has changed. That's exactly what RSI tries to measure. It helps us see when buying pressure is becoming stronger or when selling pressure is beginning to take over. Now, here's why this matters. Most beginner traders only watch the price, but professional traders also watch the momentum behind that price because sometimes a stock can still be moving higher, but the momentum behind that move is already slowing down, and that can be an early warning sign that the move is losing strength. That's one of the reasons RSI has become one of the most widely used indicators in the world. Before we continue, let me ask you a quick question. Which RSI level is traditionally considered overbought? Is it A, 50, B, 70, or C, 90? Drop your answers in the comments below. Don't worry, we'll reveal the answer shortly. Now, let me tell you one of the biggest mistakes I see many NGX traders make. A stock drops sharply, maybe from 100 naira down to 80 naira. Immediately, people start saying, "Oh, yeah, it's cheap, let me buy." But here's the problem. Just because a stock has fallen doesn't mean it has finished falling. A stock that drops from 100 naira to 80 naira can still fall to 60 naira or even lower, just like you see on this Dangote sugar stock. Now let's look at the opposite situation. A stock has been rallying for weeks. It's making new highs. Everyone is excited, so investors keep holding and holding and holding because they believe the stock can only go higher. Then suddenly the market pulls back. Maybe the stock drops 10%, then another 8%, then another 5%. And before they realize what's happening, months of profits have disappeared. I've seen this happen over and over again on the Nigerian Stock Exchange. And chances are you've probably experienced something similar yourself. This is exactly where RSI becomes useful. RSI doesn't tell us what a company is worth. Instead, it tells us whether buyers or sellers may be pushing price too aggressively, and that gives us valuable information about what could happen next. Now that you understand what RSI measures, let's talk about the two levels that every trader should know. The RSI moves between 0 and 100, and traditionally there are two numbers traders pay the most attention to, 30 and 70. When RSI moves above 70, the stock is considered overbought. When RSI moves below 30, the stock is considered oversold. Now, let me clear up one of the biggest misconceptions about RSI. A lot of beginners think if RSI goes above 70, I should sell immediately. Or if RSI goes below 30, I should buy immediately. That is one of the fastest ways to lose money, because that's not what RSI is telling you. RSI is simply saying something unusual is happening here, so pay attention. Okay, think of it this way. Imagine you're driving on the expressway. Suddenly, your speedometer says you're driving at 180 kilometers per hour. Does that automatically mean you'll have an accident and crash? No, but it tells you that you're moving very fast and you should probably slow down, right? That's exactly how RSI works. When RSI moves above 70, buyers may have pushed the stock up very quickly, and it means the stock may be getting stretched. But does that mean it must reverse immediately? No. Strong stocks can remain overbought for days, weeks, or even months. The same thing happens to the downside. When RSI drops below 30, sellers may have pushed the stock down too aggressively. That doesn't guarantee an immediate bounce, but it tells you the stock is entering an area where you should start paying close attention. And that's a huge difference. So RSI is an alert system, not a crystal ball. And by the way, if you guessed 70 in our quiz earlier, you're absolutely right. Traditionally, 70 is considered the overbought level. So congratulations to those who answered correctly. Now let me show you something that has worked really well for me when analyzing many Nigerian stocks. Instead of using the traditional 30 and 70 levels, I sometimes adjust them to 20 and 80. Now, before anyone says, but hey coach, that's not the default setting. You're right, it isn't, and that's exactly why I want you to understand why I'm making that adjustment. The Nigerian stock market behaves differently from many developed markets. Many quality NGX stocks don't always reverse the moment RSI touches 30 or 70. Sometimes they continue falling a little further before bouncing, or they continue rising before finally pulling back. By adjusting the levels to 20 and 80, I'm looking for more extreme moves. So I'm waiting for stronger signs that buyers or sellers may be becoming exhausted. That means I get fewer signals, but the signals are often of higher quality. But does that mean 20 and 80 are perfect? No. There is no perfect indicator, and there are no perfect settings. These are simply the settings that have worked well for me on many NGX stocks over time. I always encourage traders to backtest different settings and timeframes to find what works best with their own strategy. Now, let's see how I actually use RSI when I'm looking for potential buying opportunities. So this is where most traders make the biggest mistake. They see RSI below 20 and they buy immediately. Please don't do that. I made that mistake when I first started trading and it cost me money. Instead, here's the simple 4-step process I follow. Step 1. I wait for RSI to move below 20. This tells me the stock may be oversold. In other words, sellers may have pushed the price down too aggressively. But remember, oversold doesn't mean buy. It simply means start paying attention. Step 2. I wait for RSI to move back above 20. That tells me momentum may be starting to shift. Again, I'm still not buying. I'm simply gathering more evidence. Step 3. This was the missing piece that completely changed how I used RSI. I check where price is and I ask, is the stock falling into a major support area? Is it approaching a previous demand zone? Is this an area where buyers have stepped in before? Because if RSI is oversold and price is sitting at a strong support level, now I'm paying serious attention. Why? Because that's where institutions and experienced traders often begin accumulating shares. Step 4. Finally, I wait for confirmation. This could be a bullish engulfing candle, a strong bounce from support, a break above recent highs, or increasing trading volume. In other words, I want the chart to show me that buyers are actually stepping back into the market. Only then do I begin planning my entry. And notice something, guys. I am not guessing, I am waiting for evidence. And that's one of the big differences between trading and gambling. Now let's bring everything together using real Nigerian stocks. Let's look at Dangote Cement, for example. There have been several occasions where RSI dropped into the oversold region, while price approached a strong support level. Once buyers stepped in, the stock reversed and continued higher. You'll notice similar behavior on Zenith Bank. The same idea applies. Whenever price becomes overstretched to the downside, that's RSI signaling that selling pressure may be becoming exhausted. Then buyers return and momentum begins shifting. You also see this on stocks like Boa Foods, EcoBank, Aradel Holdings, United Capital, UCAP, Fidelity Bank, Dangote Sugar. Now, does this happen every single time? No. And that's important because no indicator is 100% accurate. So what we are looking for is probability, not certainty. The goal isn't to predict the future. The goal is to consistently put the odds in your favor. And that's exactly what combining RSI with support, resistance, and price action helps you do. Before you start using RSI, let me quickly share a few mistakes I want you to avoid. Mistake number 1, buying simply because RSI is below 30 or below 20. Remember, oversold is not a buy signal, it's an alert. Mistake number 2, selling simply because RSI is above 70 or above 80. Some of the strongest stocks remain overbought for a long time before they finally pull back. Mistake number 3, ignoring the overall trend. If the market is in a strong downtrend, even oversold stocks can continue falling. Mistake number 4, ignoring support and resistance. RSI works much better when it's combined with important price levels. And finally, mistake number 5, expecting RSI to predict the future. It doesn't. RSI helps you make better decisions. It doesn't remove risk. So let's quickly recap what we've covered today. You now understand what RSI is, why it's called a momentum indicator, how to add it to your trading view chart, the difference between RSI 14 and RSI 5, why I often use 20 and 80 levels for many NGX stocks, my simple 4-step process for identifying potential buying opportunities, and most importantly, you now know that RSI should never be used by itself. It works best when it's combined with support, resistance, price action, and confirmation from the market. Now, here's the thing. Learning when to buy is only half the battle. Because even if you buy the right stock, you can still lose a lot of your profits if you don't know when it's time to sell. And that's exactly what happens to many investors on the Nigerian Stock Exchange. They ride the stock all the way up, then ride it all the way back down again. So in my next video, I'm going to show you the exact RSI strategy I personally use to identify potential take profit zones before many NGX stocks begin selling off. I'll walk you through my complete step-by-step process using real market examples and show you how I combine RSI with support, resistance, candlestick confirmation, and price action to make more disciplined exit decisions. Trust me, if you found today's lesson helpful, you don't want to miss that one. If you enjoyed this video and learned something new, I'd really appreciate it if you give it a thumbs up. It helps the channel reach more traders and investors who are looking to improve their skills. And if you're new here, don't forget to subscribe and turn on the notification bell because every week I share practical trading and investing lessons designed to help you become a smarter trader and investor. Also, if you're serious about improving your chart reading skills, check out my beginner trading practice workbook using the link in the description below. And if you'd like more personalized guidance, I also offer one-on-one coaching and mentorship for adults and kids, where we analyze charts together, discuss market opportunities, build a structured trading approach, and a profitable portfolio. Thank you so much for watching. Stay disciplined, keep learning, and I'll see you in the next video.